Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's morning call, which we're opening up for everyone just for the day, just to make sure you know that it's still here. As far as the markets are concerned, okay, the last 2 days, the title of my note has been on Monday, don't push it. Yesterday was testy because it just felt as if, there was just a bit more caution in the air, and some of the most important sectors were losing their upper levels. Not breaking, but losing their 8 and 21-day moving average, which as an active trader, that's where we like to live. We like to be long stocks that are above the 8 and 21-day moving average, that are trending well, add tiers around breakouts using chart patterns. But when they break those levels, you want to get out of the way just in case volatility spikes. So this way you could actually test lower levels. Because if you break the 8 and 21-day, what's next? The 50, the 100, the 200-day. And why sit there if you're in front of your computer all day where you could actually be out of the way or maybe even short? Anyway, both days felt a little odd. I did tweet at you guys in my private Twitter feed that I was reducing positions and I was trying to reduce size and reduce some of my options because we've been in a pretty sizable portfolio approach for almost 2 months now. But again, when volatility hits, when you're reducing, it's almost like you can never reduce enough. And 2 nights ago, I had a lot of spiders, short, which would have been great to have today. Today, I'm still short spiders, but not as much. So it's not easy, and there's no exact science, but you have to have a process that you trust, and you have to maneuver. And like for today, we need to figure out, what's going to happen. The S&P futures are down 10. Will the 8-day moving average in the S&P cash break and go another 10, 15 handles to the 21-day, or hold? We've had some weakness in the banks, some weakness in the small caps, some upper momentum lost in other areas, and the transports have been, pressured. So, you have to pretty much be very careful today, just in case volatility does spike and all of a sudden the shallow dip buyers don't come in. Yesterday tech saved the day. We'll have to figure out, can it do it again? Just try not to go back to the well too much and get ran over in case it doesn't. So let's start going over the levels. If you look here at the S&P cash, all in all, still a lot to like. You've had so many nice little moves here. This was the breakout going into end of May, and then this was your gap and go in July, and then really over the summer, this is when it reclaimed the 21-day, and we've been above the 21-day pretty much since. So look at the size of this trend ever since A, reclaiming the 21-day, and then B, getting above this spot that got tested before making a move of almost 200 handles. So the question is, you're all the way up here and you have a big ascending channel. Sometimes these ascending channels, break to the downside a bit. Okay, they're allowed. Yes, markets are allowed to do that every now and then. So anyway, you take a closer look here, okay, and at this particular point, if you're very active, okay, you want to be able to, or make sure that this area holds. What is this area, which we're right about now? 25.84. If this does not hold, okay, there's really nothing in the way until about the 21-day, which is, a decent amount below. So you don't want to get caught in that if you trade actively, and if you've been trying to, catch a short, this could be your spot. Okay, and then this is actually, a much bigger level. So you have almost here, you have an accelerated trend and an intermediate trend. So here's your accelerated trend. So if this were to break, that's your next likely spot. So we shall see. At this point, I do have spiders on as a hedge. I've already covered a little bit this morning, meaning before the morning call, just in case it holds, because recently, it has held, and this area is pretty big. So around this 258, okay, I covered some. We'll see if it tries to bounce off, and if it can't, maybe I'll add some back, because again, the 21-day for the spiders is all the way down at 256.53, which is another $1.50, which as an active trader who trades your P&L and cash flow, you don't want to get caught in that, okay? Every few times that we've broken below it, the 21-day has been key support. Was key support here, was key support there, so maybe it does it again. Because this time, there are a few small signals that it could happen. What are those? Well, the banking sector, the XLF, broke its upper pennant, which we flagged on Tuesday. What do I mean by that? Well, again, when you're above the 8 and 21-day, what do you try and do? You try and be long, you try and be in a portfolio approach, and the banks reclaimed the 8 and 21-day here and was above the 8-day, held the 21-day, and then finally, this upper pennant just broke to the downside. So this was your stop if you're a momentum trader. Maybe even get short. It all depends on what you do. But at this particular point, below the 8 and 21-day, the 50-day is all the way down here. So there is some room to here, so it's in kind of no man's land. So don't just try and buy a dip because it's worked. Do with the plan. So what's the plan today? Either you get a red dog reversal around 26.16, meaning it breaks below it, then comes back above it, and then you could buy versus whatever that morning low is for a trade, or you wait and see if it works its way down to the 50-day, which could take a session or so. But at this point, this was your out, and now you're not in the way, and you could test a few things. So let's just show you a few banks that I'm going to focus on. I'm going to focus on JP Morgan today because I am not long JP Morgan, and most guys sold JP Morgan when it broke this upper area, especially if you're active. Why? Lost the 8-day, lost this upper spot, so why sit there? You're a trader. Okay, at this particular point, here is bigger support. This is the 50-day. If we saw the 50-day today, I would definitely be testing it and buying it. That's around 96. That's almost $2 below. I don't know if it's going to have enough weakness to do that today. So for today, all you know is this. Yesterday's low is 97.15. Does it hold it and bounce, or does it break below it and then do a red dog reversal, or does it break below, stay below, and then the 50 days down there? But all in all, 3 down days, definitely worth a look. Hopefully you got out of the way. We flagged this in the morning note, which comes in every day at 8:30, pretty much a day or so ago. So anyway, this could be an opportunity today, especially if you get out of the way up there. I would do the same thing for Bank of America. Bank of America gave you a wide range engulfing downward bar here. So it resolved this upper flag to the downside below the 8-day, which is a sell signal, got below the 21-day. So now we'll see, does yesterday's low hold? This is where you play. You buy versus this spot. If it breaks that spot, get out of the way. Makes a new low, comes back above it. That's the red dog reversal technique where you buy that, put a stop at whatever that low is, and then maybe you get some kind of reversal candle to buy. A nice percentage move to the downside. You're not caught. Could be an opportunity. But again, the 50-day is all the way down here. So I'm not saying it has to get to the 50-day, but we shall see. The small caps yesterday, what did it do? Got to the 50-day. Broke its upper range, was very choppy, was very erratic, so it gave some signals and it lagged for a month that maybe it'll break down. So I think most people at least didn't get caught, maybe even got short, I don't know. But yesterday, you did get a red dog reversal, and where did it happen? It happened right near the 50-day. So there was 2 different ways to play it. This wide range bar pretty much got people a little screwed around, or at least could have got you out of the way. And then it stayed in the bottom third, and then it broke below this on Tuesday. So if you were out of the way, yesterday it was worth a try. What did it do? It made a new low, came back above this midday after a few tries, 146.54, and gave you a 70-cent move. For today, it's down a little bit, so which is why part of my strategy is you make good money on a day trading move like this. I actually missed it yesterday because I was out midday, but you only take home a third, because if you had a great day yesterday with this technique, the last thing you want to do is give it all back with the down open. So if you have a third, you know what, maybe see what holds. The 50-day moved up a little bit. 50-day is closer to 146.23, so we'll see if it's buyable. Does yesterday's reversal stick, or does it get engulfed? I'm not so sure. So all you know is where the 50-day is, where yesterday's pivot is. It's right around there, 146.54. I'm long a little bit, and I'll see. Once it puts a 5, 15, 30-minute low, maybe I'll buy against it, and then if all of a sudden the market doesn't get pressured and comes off being down 10 handles and tries to work its way back, this could be a buy versus a calculated area, and then we'll see what happens here, which doesn't seem like it could happen now, but 147.45 for a push back up to test the moving averages. But at this point, we'll see. The small caps have been something to take notice, and so have the banks. They've been on the weaker side, so hopefully that had you reduced, so you're not sitting in massive longs, for a 10-handle down move because, of some of the upper levels being lost. The IBB, I have no positions. We did really well with this. It was awesome for a while. When was it awesome? It was awesome when it broke above the 8 and 21-day here, when it broke above the pennant here, when it reclaimed the moving averages there. But when it broke right here and lost the 8 and 21-day, that was your signal to get out of the way, which most of us did. Here you had a little bit of an oversold bounce, but now it's really not doing a whole heck of a lot. So at this point, some would say this is a bear flag or an H sell setup. So we'll see with the weakness today. Does it break this and test the 200-day? It could. At this point, it's not acting special. Here it's above the 8 and 21-day. Here it's below it. Different type of trade. Now you see if this breaks here. I'm not going to press this or short this. I'm just going to watch, but to see for sentiment. If this breaks this and can't get back above it, probably going to give the bears a little bit more fuel to add some pressure. Yesterday, the Qs. The Qs were the strongest sector. You know, Apple, Amazon, Google, all the names that reported good earnings all went from red to green and gave a push. They've been very good vehicles for us to trade, to hold, to swing, to have options. You know, I did clean up a little bit of it the past day or so. I still have some, so we'll get into that. All in all, though, for the Qs, you know, it's very elevated here, so you want to be a bit careful. At this point, you know, if it were to break this spot, what's this spot here in the Qs? The Qs is just say 153.34. You at least have a move to the 8-day, which is still considered strong. You know, this, you know, held here last time, but the problem is the 21-day is all the way down here. So that's a pretty sizable move if they really want to shake things up. I'm not saying they're going to shake things up and it has to happen. I'm just saying be aware. You know, when price discovery happens, you never truly know what's going to happen. All you know is yesterday's low is 153.62. This is 153.50. If that were to break, here's your 8-day. The 8-day has been support all the way since the big Friday, you know, big earnings day from Amazon and Intel and Microsoft and Google, etc. But what you have here is an ascending channel here, so you don't want to be involved if it breaks to the downside. Anyway, I'm not long the Qs. I'll see whether or not it holds or not. What I'm going to do is I'm going to see, you know, in a sea of red, you want to see what can go green. Hopefully they do try and take, you know, some of the names that have been really strong green. So if you're long some overnight, maybe you add Versa 5-15-minute low, and then if it bounces, trade out of that, then hold what you initially had. But if they don't bounce, just realize they've come a long way, and you might not want to sit there. You might just want to take a small loss and revisit. If you're in them from weeks ago, then you know what? You're in them from weeks ago, and you give it the room based on your time frame. Let's go Apple first. Apple, I'm still in. It's been an awesome trade. It's only down 30 cents, so it's no big deal right now, but you know, we'll see. This gave us, you know, a nice trade here, and then it gave a nice trade there when it broke out and held, and then, you know, one of the strategies post earnings to buy versus, you know, 171. And if you're still in it versus this day, you know, you'll have to figure out what's next. I would say this: if you're super duper active like me, this is your stop. Your stop is yesterday's low, 174.33. If it holds this and hangs in there, just sit with it and showing relative strength. It might be where money continues to hide. I do like it, but if it were to break this spot, there's really nothing down to the 8-day, and I don't know if you want to sit in that. So what I'm going to do is I might buy a little bit to see if it goes red to green. Every morning since being long here, you've been able to buy it, you know, while it was lower for it to go positive and push. So we'll see if today's the day like that or if it changes. It might change, it might not. Amazon, I'm not in. We've had a really nice run with this stock. We had options into earnings. I bought it the day after earnings versus pivot. Okay, we had a nice move. Then there was another tradable setup here, and then when it cleared this spot, and now we'll see what happens here. I'm not in it. I might look at it if it gets down towards this 119-117. If it gets down there, that's a good spot to maybe buy the dip. If that breaks, though, the 8-day is all the way down here, which is another 17 points. So you have to be a bit careful. So we'll see, do dip buyers remain shallow, or do they shake the tree a little bit? So at this point, you know, I'm going to be very patient. I'm going to wait for that 5, 15, 30-minute low, and then maybe I buy some for a move to go green. If it can't go, then I'll wait. I am in some Google leftover from yesterday, so I'll have to figure out what to do today. Okay, not the end of the world. You know, some of you guys are in it from this big gap up and that 1,022, which is fine. You know, then you don't really care. So for me, I'm going to give it to the 8-day, okay, or maybe a little bit less, 1,047. Okay, that's $11 worth of risk. We've done really well with it, you know, so I'm going to give it that spot. You know, if it holds there and goes sideways and like does a bottom tail, very cool. Then at some point it takes this out, and that shows you tech's still in the game. If this were to break, though, you know, it could do some price discovery. So why sit in there, especially if the market, you know, corrects for more than, you know, an hour, which we haven't seen yet. But again, just take notice that that could happen, and these things have come a long way. And you do have a somewhat of an ascending channel here, so you want to make sure this holds. This holds, it's fine. You know, we've seen it hold every which time. One of these times it might not. So if it doesn't, the trade changes a little bit and we figure it out. But for now, it's, you know, we'll see. I'm only in Apple and in Google. I'm not in as many as I had before. I'm not in Facebook. I'm not in Bob. I'm not in those names that I'm usually in, or even Netflix. We'll see what happens here with, you know, Facebook's nice and tight. Okay, at this particular point, does it resolve lower like those banks did, or does it hang in there? So for those of you that are in Facebook or looking for an opportunity for active support to stay, I would say you want this to hold 179. It holds 179. That would be impressive. If it breaks here with authority, you know what? You probably have to get out of the way if you're long, or maybe some of you guys will short it. I'm probably not going to short it. I might sit and see, if it shows some relative strength today for an opportunity. Netflix, we were involved in. I got stopped out on Monday. Why did I get stopped out? Because this upper area broke to the downside. It lost the 8-day. I was thinking it could go sideways and break above. It broke below. Now, if you're still in it, I would say, hey, give it to this spot, 191, different type of trade. But for me, it was special in here, thinking maybe it can go, but then, So now I'll wait. You'll see if this 191 holds. As far as Tesla, no position. I tried it yesterday. It didn't really work. Why did I try it yesterday? I don't know. It's been so good to us. I thought maybe that could be a gap fill. Couldn't happen yesterday. Maybe it happens this time. I'm going to watch it. If it goes green and starts hanging in there, shows relative strength, maybe you can nibble a little bit above 306.89. And then if it were to take out this 308.69, it could fill this gap. But again, it's broken. Why is it broken? It broke right here when it lost the 8 and 21 day. We like being in Tesla when it breaks to the upside, stays above the 8-day, follows the trend, is really strong, not below it. Same thing happened here until all of a sudden this level didn't hold. This broke, that broke, and now here we are. So we'll see. This is pretty sizable support going back a long distance. But again, you have to be careful. So for today, we'll see if this holds and goes green. If not, it's not going to be the first thing I go to unless all of a sudden it goes green and shows a heck of a lot of relative strength and changes character for a trade. Chinese internet names, the Shanghai was strong, whereas the Nikkei seems like it had a climactic top. What do I mean by that? I mean that the Nikkei has been up 26 out of 29 sessions. I think it was up 2%, went red, went down 2%, came off those lows. If that was the S&P, I would be like, whoa. That is an engulfing downside, could be a red dog reversal. One of those days where you have to take notice to see if, it creates a rest. So if that's the case, maybe the Nikkei that's been a leader, it becomes not a headwind, but at least not a tailwind, like every morning you wake up and it's up a decent percentage, which helped our markets. So anyway, BABA, I'm not in. Doesn't mean it's bad. It just means that, I try to loosen, tighten up positions. For me, I'm going to see, does it hold this spot? This spot to me is pretty important. This like 182. If you're really, really active, see if it holds the 8-day, because if it doesn't hold the 8-day, what happens next? Maybe the 21-day. And it's consolidating since earnings. It looks just fine. I don't think you need to be so spread out amongst these Chinese internet names, but like Nates still acts well. Maybe this, if you're long versus the gap, just stay the course, don't over trade it. I was looking at this WUBA, looks kind of interesting. Earnings in next week. I'm not going to buy it today, but some guys are accumulating some calls just in case it delivers. Watching the action in WB gives me a little confidence that things can still break out. Look at that breakout. So it's not like everything is, having earnings reports and failing. They're rewarding good reports even though it took a day later. So this, to me, is saying, hey, if this performs or this, has that solid report, maybe it can go. We shall see. Intel was unbelievable for us. If you guys remember, back in September, I put that blog post out on why I love Intel. It was at 36. A lot of us bought calls, the 37s and 38s, and pre-earnings it was already at 42. So at this point, if you have it in your IRA, sit there. We talked about accumulating that all year. If you, had the options, I created a spread, so I'm already, pretty much fulfilled on that. I can't do anything with it. I sold my stock, but I might buy it back. We'll see. At this point, it's holding the 8-day, looking good, consolidating a huge move. This is when, we loved it. This is when we had it on as a trade. I think I added to it when it took out that 40, and now I'm not in it. I have a call spread, but it's not. I can't make any more money there. So what I might do is, today into the down move, perhaps I'll nibble a little bit because it's been best in breed versus 45.60, and then if it continues to hold and goes from red to green, chances are at some point it takes out this 47.30 and still deemed cheap. Barron's started liking it up here. Obviously, as active traders and technicians, we liked it well below it. But anyway, we'll see. So, in conclusion, listen, even if we saw some signals, which everyone did, it took a little time to transpire where we have this big down open. I think we've had 12 to 25 positions, including options, over the course of the last month to 2 months, and now I'm down to 5 longs and a short and very small options. But still, if you're down like this, it could be a little bit of a down day, but you don't want to turn it into a disaster. If you're coming in flat, which a lot of guys do because they don't hold swings. And this is a very interesting time where you could perhaps buy Versa 5, 15, 30-minute low, see if tech can go green. You know, maybe look for that trade in the banks. The banks are getting very oversold. See if they do a red dog reversal around yesterday's low, or maybe come into the 50-day. But the 50-day is well below. Yesterday we had that reversal in the small caps. We'll see if there's any commitment to it. What do I mean? Maybe, you know, if you sold it because you don't take things home when you had your day trade yesterday, you only have a third, maybe buy versus that pivot or the 50-day, which I believe I showed you earlier. And if not, and you want to wait and see, do so. Sometimes it takes 15, 30, 60 minutes, or even the day before you get a clear-cut pivot to define your risk to trade against. And at this point, we haven't had any kind of corrective move in the S&P cash or in tech. So if they take you by surprise, you don't want to get caught. So don't get caught behind the wheel or falling asleep behind the wheel. And if you made a lot of money in a portfolio approach leading into this and you still have some things on, don't be stubborn. Don't give back more than 20% of what you just made, or more than a third. Because the last thing you want to do is work, so hard for multiple days and then give it all back in 2 when some kind of, leg sweep happens. But at least there's been some signals. What are the signals? You break the 8-day, what's next to 21-day? You break the 8 and 21-day, what could be next to 50-day? So that's the rules that we live by. We have those pivots, we define them every day. And if you're having trouble out there and you're watching this video and you haven't seen it in a while, what you should do is look at Redler All Access. Redler All Access, okay, is my private Twitter feed. Every morning, I'm pretty much giving 20 tweets or so trying to help you prepare for the day so you can create your game plan. If you wanted my note, that's a different service where you get a note delivered at 8:30 that has all the levels of sectors, ideas based around my go-to list, which is usually 20, 25 names. It has the banks, it has high beta tech, it has mega cap tech, it has the stocks in play. And then, you also, with the Redler All Access note, not just a private Twitter, you get the morning call video and the recap, and I do think it could help you and get you on track or even enhance your gains. It's up to you, though. If you're doing well, congratulations. We can interact here and there. If not, I do think it's priced accordingly, and you could reach out to T3Live.com or Amber at T3Live.com or the sales staff, and I do think they could help you. And again, it's November. Let's finish the year strong. And if you aren't happy with 2017, make some changes and take accountability for 2018. Have a good one, and I'll see you in the Twitter sphere. Bye-bye.